Hello guys, and welcome to Daily Market Movements. Welcome to another episode of Indices Watch. In today's video, we're going to be analyzing the NASDAQ100 followed by the S&P 500 price charts. Just before I start today's video, I just want to let you all know about our streaming service that we have here at Daily Market Movements. All of these videos that you are currently watching here on YouTube are just a brief look at the chart, going into, my bias, whether that be bullish or bearish. But if you would like to become part of our trading signal team, then please head over to dailymarketmovements.com. I've left a link in the description of this video, which will take you to this website here. And on this website, you can have access to more in-depth videos. I'm talking 10 to 15 minute daily videos where we really analyze, several markets. That's been crypto, gold, crude oil, the indices, US stocks. And we also have various learning education videos that you can benefit from as well. And of course, once you subscribe to the streaming service, you then get access to our private Telegram channel, and that's of course where we distribute the trading signals and back them up with those long videos over on the streaming service. So very small fee of $399 for a year's membership. Make sure you go and check it out. But let's start today's video. So here to start off with, we have the NASDAQ100. NASDAQ100 had a fantastic close on Thursday. I think it was Thursday when I did my last video, and that's when, on Friday was when I did my last video, and that's when we were trading briefly below this uptrend that we've been in since May 2020. And I said, today, guys, it's all about the close. If we can get a daily close back above this uptrend, then that would be fantastic news, and that would mean that we've respected the uptrend. And if we were to get that close, it's very likely that we will now go and trade up towards the 50-day EMA up at 15,889, and I still do believe that that is the case. On several occasions now, so on two previous occasions, we have tested at the bottom of this uptrend, and we failed to break below it on two occasions. So this to me tells me that the bulls still have full control of this market. Yes, we have seen some volatility in the past couple of weeks, especially the start of 2022. We're currently down 7.53%, but at the lows we were down 9.66%. So the big question is, was this the 10% correction that we needed? And now is it time for the market to return back towards those all-time highs? If I had to give you my personal opinion, I would come out and say yes, I do believe that we will return to those all-time highs. History tells us that 10% corrections are very healthy. We've had some really hawkish news as of recent, with banks coming out saying that they expect 4 rate hikes, maybe even 5, rather than the 3 initially anticipated. And I'm going to come out and share my own opinion, but I do not believe that is the case. I think the Fed will find it extremely hard to hike interest rates 4 times or more this year. I think 3 is probably going to happen. That's as long as there's no other COVID variants that maybe rock the economy's recovery. But I do not see there being 4 interest rate hikes this year, and of course that now allows for some positive market reaction when the Fed does come out, whether that be in 3 to 6 months time, and say, guys, I think that 3 hikes is going to be it for this year. So that of course will cause some upside volatility when the Fed does come out that and say that, or you might even just get some banks come out and eat their words and say, we might have got that wrong and we only see 3 now. So it is good, the medium to longer run. Corrections are healthy, it allows you to buy these dips. So of course tech being heavily impacted by rate hikes, as it has many companies that have extremely high valuations, and most of them aren't even making profit yet, especially with some of these electric car vehicles, etc. So all this is now, I think that this, the last couple of weeks, we've seen that rotation from high growth tech stocks into value, and I think that we will start to see rotation back from value into high growth tech. But as the old saying goes, when the tide goes out and then it comes back in again, not all boats will rise, and I think that's or not all boats will float, I should say. And I think that's exactly what I'm trying to put at here. A lot of these high tech growth companies that aren't really making any profits at this moment in time, I think they are really going to struggle to keep their high valuations. But you have other stocks, the likes of Nvidia, Google, Facebook, Amazon, Apple, these are the big, Microsoft, these are the big high growth tech names that are making incredible amounts of money. Their products are tangible, and I think that they will continue to do very well in 2022 and blossom from their high valuations in 2021. But let's move over to the S&P 500. Of course, the S&P 500 hasn't been so negatively impacted as just like the NASDAQ 100, and that's due to the fact it's a basket of both value and high-tech growth stocks. So I just mentioned a few moments ago that we've seen a rotation from the high growth tech into value. Well, that also benefits to the S&P 500. So, don't get me wrong, it is the high growth tech names that represent the majority of the S&P 500, Apple being the largest, and that's why we are still down 3.49%. But on a whole, we're nowhere near that 8% mark that we see over in the S&P 500. So let's just quickly speak about the S&P 500. We've tested that 50-day EMA now for some time. Again, on Friday, we got that daily close pretty much on the 50-day EMA line, which is very encouraging. That to me tells me that we can easily go and retest those highs. So that scenario, if I was a retail trader, I would be testing those high levels. Right now offers a fantastic risk-reward ratio. We have got a signal open in both the NASDAQ 100 and the S&P 500 where we are buyers. I can't share with you on YouTube where our entry and exit strategy is, but if I was just to quickly put a quick trade on, you kind of want to be looking to do something like this. You want to have your stop loss just below the bottom of that uptrend, and you want to be targeting those all-time highs. And straight away that gives you a 3.24% upside, and you're only risking 1.96%. So a nice, pretty much a 3-to-2 risk-reward ratio. So very good indeed. But that's these are the type of trades you want to be placing. And of course, over here in the NASDAQ 100, as I just mentioned, I can't share with you our official entry and exit strategy. But when you're placing a trade here, you want to be targeting those all-time highs. So here we're pretty much gaining 8% towards the upside. You've got your stop loss just below the 200-day EMA. So you're targeting an 8% gain, and you're only risking a 4% loss. So again, a 2-for-1 risk-reward ratio. These are the type of trades as retail traders you want to be looking to place here in the NASDAQ 100. But of course, today it's Martin Luther Day, so the markets are shut in the US. So don't expect any volatility. That's why we do have the NASDAQ 100 and the S&P 500 futures open at this moment in time, but it'll just be a pretty much flat day really. So as we go into tomorrow, of course, that's when the trading week really starts to get going, and it'll be interesting to see how the markets react after those positive closes that we achieved on Friday. But in both indices, I'm very bullish. They both showed the signs that I wanted to see last week, especially on that close on Friday. And I think eventually we will return to rotation back into high-tech growth, and that will continue to carry the market.